Hey guys, what's up? Pitmeister78 here. So, from a perspective here, since the last recording, we're still in these two trades. They've obviously gone against us. Since I last spoke, I am about 10 pips away, 11 pips away, 10 and a half from getting stopped out on the euro, and about 5 pips from getting stopped out on the franc. So we've definitely we've definitely gone back from where I was before. Again, I'm still I'm bullish on my positions. Um, I'd like to see. I think there's going to be a nice bounce on Monday. I don't know if it's going to come all the way up to here, so I'll have to wait and see. Now this area right here. Let me zoom in over here. Now this area right here is now resistance. So I may have to, on Sunday, depending on where it opens up, I may have to tighten some stops a little bit, or at least take profit, because now this is going to be a first little prior resistance point. And I mean, we're talking about, to get where my profit target is now, we're talking, 60 pips, which is almost a whole average true range. So we may have to aim for something a little lower, maybe right up here. And then on the euro, kind of the same deal. Resistance is now going to be this instead of down here. So um, we'll have to wait and see what happens on that one. Still, still very bullish on my positions. One thing I wanted to mention is the beauty of this crossover now. What I was trying to test, and again, I'm not going to say it doesn't work, because yesterday was actually the first day I tried it. The reason why normally I like to take the position when this bar, I would have taken this position right here on the close. The reason I didn't do that is because I wanted to wait not only until I got a confirmation down here, but I also got a moving average cross, which didn't happen until yesterday at the close. When this candle opened, there was a cross. When this closed, we started over here and we were just about to cross. But again, if this, shot up all the way up here, it wouldn't have crossed. So what I was trying to do is wait for the crosses. And that's what I did on all these pairs too. You can see on the dollar franc, same thing. I was waiting, originally I would have taken this candle right here at the close, and we would have gotten this, but I was waiting for a cross. I think a good indicator. I mean, this cross right here, this moving average cross, these work really well. That they help you kind of stay away from bad trades. I was going to look for an example. There are some examples. Okay, here's a good one right here. So we can see right here we had a signal generated, which normally I would have taken a short position and aimed for probably somewhere down here. But you can see, look at the moving average. When this closed, the moving average was still pretty solid. It barely started to point down. So I'd usually like to see, this is very high. I mean, this thing just kind of shot up, and this was a little correction, little pullback, and then boom, we went back up. Kind of the same thing with this one. Although, depending on where you put your profit target, this may have worked out. It's only 20 pips or so, and then but you can see the close, and the moving average was still hadn't really crossed. What I like to see a nice close, a good price action candle. Like, had the moving average been pointing down better, I would have taken this trade, because that's a nice bearish candle right here. Whereas this one, not really much action here. Kind of market didn't really know which way it wanted to go at one point. And I like to see the rollovers too of the lines going down. Kind of like right here. See how these lines are pointing down? Even though that would have worked out, I probably would not have taken that trade, just because, let's see, would I? See, no, oh, I would have taken it, yes, because the moving average had already crossed. If the moving average is already crossing, then I would have taken it. Now, again, I don't know. I'd have to go back and look. I don't know when this happened right here. I don't know if that happened in the open or at the, if it went all the way up and then came all the way back down. I don't know when that happened. So had I entered here, I probably only was going for 20 or 30 pips or so. I'd have to look over here, but more than likely I might have gotten stopped out on this one just because it went back so high. So, but this moving average, it really helps. You don't want to take a trade in the opposite direction unless the moving average, this red signal line, tells you, or indicates, that it wants to do what you think it's going to do. Kind of the thing here, this would have been a tricky one, because I probably would have taken it, because the moving average had just crossed and its candle close. It closed above this line, so that all indications would have told me to take that, and it only went up 15 pips or so. I don't know where the resistance, let's see where the resistance was on this one. It might not even been worth the trade. So if I was here, I probably would have aimed. I probably would have either aimed for here or somewhere in here, because that's way too high for just a quick trade. So I probably would have said, this had been 20. I don't know. It's tough. I'll just say that I probably would have been stopped out on that one, just because, again, I don't know when, had I seen this, if I'm watching, if my profit target is right here, if I'm watching this and it's 20 pips away and I'm at like 18, I usually will go ahead and just close the position and let the profits run. But, kind of like with the Euro New Zealand this morning, I was only 30 some pips away, so that wasn't really close enough for me to get out. I should have gotten out, though, just because, again, with how close it already came, within like 5 pips. Here's kind of another example. The Euro really hasn't been very good. You can see this moving average hadn't crossed. Now on this candle, it would have been a pin bar, so I would not have taken it, even though it would have worked out. I would have saw this one, then I would have seen a moving average cross. I probably would have taken this, just because I saw it. I don't know, because of the double pin bar, probably not. And then, again, we still, very big. This right here was a nice indicator that, it does not want to go down. However, it crashed. So there was probably some news here, on the dollar or something that made it fall. Had there not been any news, I bet you this probably would have went up like this, because you can tell, 3 times in the resistance. And then by the time this candle happened, I probably wouldn't even have gotten into the trade, just because, it already has gone down so much. The moving average is, the wider the spread between the two moving averages, the more the bigger the direction will move. Euro's going back up again. Got about 40 minutes till the market closes here. So I just wanted to kind of talk about the importance of waiting for, signals. You can't always wait for the exact signal. Now this one, again, we don't know when it happened, but more than likely it would have worked out. It crossed above, nice little tail here, long shadow. Definitely would have been aiming. If I saw this already, this would have been a quick one. This would have probably been like a one lot, 20 pip scalp right there. If it was only 19, yeah, I probably would even put it at 15 again, and then we would have hit it, obviously, and then let my profits go, and we would have got all the way up to here. So more than likely, that's what would have happened on that one. So I just wanted to just kind of go over that and let you guys know that the importance of waiting, but the confluence, trying to have confluence. So well, then I guess that's all I have. I'll let you know what happens. Right now we're 10 pips away again, and we're still 5 pips away on this one. So we'll see what happens. Take care, everybody. Thanks.